Thank you for joining us today. I'm delighted to start our session. Today, we will be hosting a discussion on rising insurance costs for commercial fleet, and more importantly, what you can do about it. My name is Jill Bender. I oversee marketing here at ClearPathGPS Fleet Tracking Solutions, and very delighted to have online with us also two fleet safety and insurance experts with the Leavitt Group, which is one of the top insurance brokerages in our nation. Welcome, Alex Miller and Nick Campo.
Thanks. Good
Thank
to
you,
be
Jill.
here.
Happy to be here with you.
Absolutely. You know, when we're talking about the different trends and issues in the insurance industry over the course of the last few months, it really started to shed light that there are many different factors driving insurance. And we thought, you know what, this is a great discussion. And we know that those in the industry that have fleets would be certainly interested in hearing your insights. So delighted that you're able to join us today. And thank you to all those that were able to log in with us. We hope to make today's session both informative and interactive. We will be taking some questions. In fact, I already got a few pre-questions prior to today's event. Thank you for sending those along. So we'll get to those. But first things first, let's dive in and share some insights. So for today's topic, we have kept it very short and succinct on purpose. We want to give you as much content and insights as possible in a short period of time because we know how busy your days are. But we will be sending a recording as well as a synopsis of the session should you like to share it with others, and are welcome to have follow-up questions after the event. So for today's session, we really are going to focus on sort of a very high level, why insurance costs are rising. And we could all surmise that, but we'll get the expert's point of view on that, along with what the key market factors are. And when we're going through this, it's interesting that those aren't always what you would expect. And then more importantly, what can you do as your operations, as your business to help sort of mitigate those rise in the costs and the impact to your business? And then we always like to round it off of like, okay, where are we today? And more importantly, what are sort of the crystal ball or the outlook going into the future? So with that, I am going to be hosting this session and we'll be relying on my experts to take us to the next level. So Nick, why don't you get started? Tell us just the state of the market. Why are insurance rates rising?
Yeah, thank you. So there's several factors that kind of come into play here. I think, generally just, to put it plainly, when you ask somebody, is it safer to drive today than it was 10 years ago? Most people would agree that, it's a little less safe now. And that's coming into play with the rates that you're getting on your renewals as an insurance buyer. Specifically, the last decade really has been unprofitable for insurance carriers. They have been running at what they call a 108 combined ratio. And what that means is that every dollar they take in premium, they're paying out $1.08 in claims. So you don't have to be an insurance guru to understand that that's not a good position for the insurance carriers, and they're going to react by raising rates. And you've seen that for several years now, but still they can't keep up. So the losses, the claims they're having are outpacing the premium increases, even with what we've seen in the marketplace the last several years. For example, just in 2019, there was $4 billion in losses just in commercial auto. So definitely a tough time for the carriers, and that's what we're seeing in rates right now.
You know, when you shared this stat initially, I was like, wow, I really thought, I always just assumed insurance carriers were making tons of money hand over fist, and, but I'm sure many of the folks online were a bit more savvy in that knowledge than I was. But again, seeing the numbers really sheds light on, well, certainly while rates are rising, but I know that there's more to that story. So what are some of the other factors?
Yeah, that's a great segue into this slide here. So it's not uncommon for insurance carriers to run in a combined ratio above 100, which means that from an underwriting standpoint, they are taking a loss. So they're paying out more in claims than they're taking in premium. But that threshold really can't be too high above 100. In cases where it makes sense is when they're getting more investment income. So more return on their investment, they can run a little bit of a loss on the actual underwriting, the rates they're charging. But the rate environment that we're in now, low interest rates, they're getting a lower return on their investment, the surplus that they're investing. And that's where it gets kind of in this state we're in now, where they have to increase rates quite a bit, a little bit of a knee-jerk reaction here the last few years. We're also seeing, because of this, there's less capacity. So carriers are leaving. I'm here in California. Carriers are not writing insurance, commercial auto insurance in California like they were before. And what that means is that we have less carriers to negotiate with. So if we had 10 carriers, 5 years ago that would do commercial auto, and now we only have 5, for example, that's just less of a pool to really negotiate and drive down your rates.
So, but I know that we did mention, and in fact, I even got someone responding to our invite to join that saying, well, wait a second, my rates haven't really been impacted. Any thoughts on that part?
Yeah, that's a great point. So the data that we've shared so far is kind of just on a national level. So you'll see to varying degrees rate increases in certain states. Some states are not being impacted the same way that maybe California or Texas or Louisiana, Florida are. And what I would suggest is that a lot of the content that we're going to share today is still very pertinent, because what's a little bit harder to capture is the soft costs when you have accidents. You have downtime on vehicles, you have administrative time, managing the claim, just a lot of soft costs that go into that. So I think there's a little bit more to it than just the rate increases. If you're in a state where you're not seeing the rate increases, it could be lagging behind a little bit, so it might be coming. So just good to keep an eye on the stuff that we'll share with you today.
A bit of buyer beware, right?
Right.
Well, let's look at what those and more. And this is where I know a lot of these pieces that you're sharing here are pretty straightforward, but there were definitely a few surprises on my end.
Yeah, Alex, I'm going to ask you to jump in here when we get to some of the delivery service. I'll go over just quickly the repair costs. I mean, it's pretty, I guess, self-explanatory to some extent that cars are much more expensive these days to repair. I was looking at some data yesterday that showed cars are 2 times likely or 2 times more expensive to repair when they have driver assistance. So the technology in the vehicles now, windshield repair, when you have the heads-up display kind of things, are triple what they used to be for just a basic windshield. Labor costs obviously are going up. So anytime, we have a fender bender that used to barely meet the deductible, now they're blowing through that by quite a bit. We're also seeing a lot of legal challenges. So the jury awards are extremely high compared to what they used to be, and attorneys are more inclined to go to trial. And so that's really ratcheting up the cost of these claims as well. And then, of course, medical inflation. If you've seen your health premiums and deductibles go up over the years, that is directly correlated to how much it costs if there's an injury in an accident. Alex, do you want to talk about the delivery service?
Yeah. So with the pandemic, there's quite a bit of there's a gap in drivers. There's a lot of people that are not working, and there are shortages, and companies are hiring people that have less experience. They don't have the depth of knowledge that they used to have. And the people that do have that experience, they're working longer hours, trying to keep up with the shortages. And I don't know if you've seen this. I've seen this definitely. The excessive speeding and increased traffic. The speeding during the pandemic, you've had fewer people on the road, so that people will naturally try to speed up, and the road is open, so everybody feels like, okay, I can speed up, and that causes bigger accidents, more severe accidents, bigger problems, bigger losses. And the increased traffic before the pandemic, we were seeing lots more cars on the road, and a lot of unique things with technology. The driverless cars. I just saw something not too long ago where somebody got a ticket for driving or being in traffic from the back seat in one of those Tesla cars that have self-driving mode. Just crazy. People are doing things that they really shouldn't be doing. One other thing I just wanted to touch on real quick with the legal aspect, nuclear judgments, that was due in part to the attorneys lobby changing some of the rules that allow more of those cases to fester and go longer. I believe that's part of it. So there's a lot of things coming down on the auto market to not prevent these kinds of losses to happen.
You know, I think it's fascinating when you say this, because again, we're talking about things that are very sort of obvious to all of us. Certainly, especially with the labor and cost of goods rising, the shortage. But sort of this pandemic, certainly guilty. I think we could all raise our hands, right, of enjoying highways without a lot of traffic. So
Sure.
seems to all make sense there.
The other
So,
thing, Jill, if you look at this list and this is just a short list of a lot of things that impact it. A lot of the things that are on here are things that we can prevent. We have a whole lot more control over, especially when we talk about the people who are driving for our companies. We have a lot more control over the behaviors that people are having, as opposed to legal costs and repair costs and the medical cost increases. So we've got some control and leverage over our drivers when we're talking about excessive speeding and hiring the right kind of drivers. There's a lot more control that we can have over preventing these losses from happening to begin with.
well, I love that analogy. Is sort of the uncontrollable versus controllable components, and saying, okay, not thrilled with the ones that we can't control, but certainly what's in our wheelhouse to control. So absolutely makes sense. So that's a great sort of entry to our next sort of discussion topic, and this will be sort of the crux of where we really dig in a bit more in our short time we have today, is really look at this going, okay, we know what we can control perhaps and what we can't control. Doesn't mean we like it, but we can't. So with that, you know, what can we do this? What can we achieve? And, you know, I think every operations business is different, right? Everyone has their own use cases and gaps, and really just understanding what's right for your business. So gentlemen, when we were talking about what makes sense to really talk about, you know, it really became evident that there were sort of three main buckets, right? Internally, you know, looking inward, what you can do, some technology that can be overlaid to support your efforts, and then more importantly, how insurance can be leveraged to your advantage. So I know this is where we really want to dive in, and that's why many people have joined us. So I say, let's go ahead and get started. Talk to us about internal.
Yeah, so I'll back up a little bit and talk a little bit about where we come up with these. When I work with clients that to improve their processes, one of the first things we do is dive in and do a gap analysis. What are they doing well, and what are they doing wrong? Where are their opportunities? And there's quite often internally these types of issues that people have. They may not have the right risk control program going on. They may not have the right written procedures in place that people need to do the right thing. When you have people in place, they need to have direction. They need to have parameters that they need to follow. And then there's an old adage that you hire your problems. A lot of hiring processes need to be robust. They need to be defined, as opposed to the warm body theory. You know, somebody shows up and you put a mirror under their nose, up, fogged up, you're good. Let's go. And I know it's very difficult nowadays with the lack of competent drivers, but there are ways to get around that, and there are places that people can go to find diamonds in the rough, per se. Onboarding, new hire training, ongoing training. You have to tell the people and show the people that you're hiring what the expectations are and how you expect them to behave while they're with you, while they're with your organization. And then once they've been on board for a while, things happen sometimes. And accident investigations invariably are one of those things that people can do to prevent future losses. That's one of those things that people will either skip, or they'll just do a cursory version to find out what happened. And it's an opportunity for every company. You do a very good investigation. Anytime there's an accident, there's a reason that it happened. If you find out why it happened, you can prevent it from happening again. So, and that applies to any level of incident. Incentive programs and disciplinary programs, you could call it the carrot and the stick theory. You can incentivize people to do things, and you need to discipline people for quite a few reasons. And even from a regulatory perspective, discipline and documenting discipline programs and documenting your disciplinary actions are critical to preventing all different kinds of exposures, regulatory exposures, future lawsuits, things like that. And do you have someone that's been designated to help and organize these things? All of these internal things that we're talking about are tools that you can use to at least mitigate the losses that you're having, if not eliminate a significant portion of them. I mean, we're always looking for zero, but on your way to zero, things are going to happen, and we need to be able to deal with those appropriately.
I think that's great, Alex. One thing I would add is that, when we look at these things, you don't want to really approach it as like a one size fits all, right? So depending on your organization, if you have 50 vehicle units, you may have some of this stuff in place versus somebody that has 5 units and doesn't have the ability to have a designated safety or fleet manager.
Oh, absolutely.
But there are ways to make sure that you're covering your bases here. And I would just kind of underscore that no matter what the size of your organization is, from a legal standpoint and the ability to defend yourself in a claim, you'll be in a much better situation if you have these programs and processes in place. You can imagine that if you did have to go to trial and an attorney subpoenas your training records, that it's going to be an uncomfortable situation if you have nothing to provide in terms of how you selected your drivers and how you trained them and how you discipline them, and all those components.
Absolutely. There's actually a Cal OSHA defense. There's a specific defense you can use for a citation that involves disciplinary actions. It's called employee independent action. And if you've trained your employees and you have a robust safety program and you can prove that you've disciplined your employees, that's a defense that can make those citations actually go away, called vacating the citation. So it's like it never happened. It's, like a parent who's, I've told them, I've disciplined them, and I don't know what else to do with them other than fire them, but the bad thing happened before I could get rid of them. So very critical to have.
Well, and what's interesting too, and we hear this a lot, with our customers, and for different scenarios, is they kind of don't know what they don't know, right? So that
Right.
part that you talked about of, sort of taking a look at your organization, knowing that a lot of business operations wear many hats, right? So really understanding, and what I've heard and what I think you all shared was just getting started and start documenting, right?
Yeah.
Is a large part of it. But again, I think, and we have this a little bit further down the line, is helping prioritize, right? Because again, even if you are managing a larger fleet or a larger business, there's always room for continuous improvement. And I know that insurance companies look at that, right?
Absolutely. I mean, I know I skipped over to the beginning, but that's probably one of the most important things that we do is do that gap analysis. You do the risk control analysis and find out what we need to work on, find out what you're doing well, and support that, but find out what the gaps might be and fill those gaps and make it as robust as possible.
And have the action plan and documented it, right?
Absolutely. Yes.
Great. Well, I think the next thing too is knowing that, you can't do everything on your own. And that's where deploying tools such as telematics, of course, I'm going to say that. I'm with one of the leading fleet tracking service providers.
Yeah.
But again, both to you, Alex and Nick, share with us, why is telematics a big part of this?
Well, I'll take the first shot at this. The telematics is, I look at it similar to accident investigations and job site investigations. You're generating data, and what that data does, it tells you what your people are doing. And especially in the, before telematics, you sent a driver out, you wouldn't know unless you're riding with them what their behavior was. You wouldn't know how they were acting out on the road, where they're going, what the paths they're taking, how fast are they going, are they sliding sideways around corners, or are they treating your vehicle like a rental car, something along those lines. But with telematics, you get an immense amount of data that you can use to impact the driver's behaviors. You can work those into some of the tools I talked about before for your internal. You can work those into your performance evaluations. You can work that data into disciplinary actions. You can work that data into all kinds of different things, with the bottom line to change the behavior of the drivers that need to have their behavior changed. I think it's one of the best things that a company can do, to one of the tools they can add to their quiver to help change those poor drivers' behavior. What do you think, Nick?
Yeah, I would also add that from a claim standpoint, when you have an auto accident, this has been so vital to our clients and our ability to work with insurance carrier adjusters when we have this data. I'll give you just one quick story. We had a client that their driver was going onto the on-ramp, and a third party, another person on the highway, clipped them. And that person alleged that our driver was going 65 going onto the on-ramp and swerved into the lane, and it was their fault. And we pulled the telematics data and showed that our driver was going 40 going on, just how they were supposed to, doing nothing wrong. And we were able to, really strongly defend that client versus not having the data, and you're kind of in a he said, she said game. And then conversely, when you have a driver that screwed up, made a bad decision, wasn't driving, in a safe manner, and it was really their fault, we know, hey, we need to settle this thing quickly. We need to get out of this. We're in the wrong here. Let's settle this thing and move on, and go back to our training programs and stuff like that. So I think it's so valuable to have that data, as Alex, you pointed out.
Excellent. Yeah.
No, absolutely. And I dare say, gentlemen, I think we missed a key bullet on here, and I'm looking at this and realizing it's not on here, is the whole concept of loss mitigation with telematics, and really what that gets you as far as really having eyes on the fleet, and potentially thwarting theft from happening, whether it's, getting alerts when things are unauthorized movements and so forth, and certainly the impact of that, of making those claims and reducing those sort of claims. Is that right?
Not only theft too, but we had another quick story. We had a contractor that implemented telematics and found out that his drivers were taking his vehicles down to LA on the weekends from the Bay Area. You would just see them migrate down south and do side jobs all weekend and come back up. And you can imagine, how that made him feel. So it really just gives you an idea of where your assets are at, and making sure that, you're protected and not wasting money, number one, and not opening yourself up to liability that you didn't know you had.
Yeah. And to add on to that, Nick, the thing that triggered that wasn't your typical, it wasn't what you think. What triggered that was, hey, my fuel expenses aren't matching up. My fuel, I'm spending way more fuel than I should be. And my inventory in my warehouse isn't jiving. So there's a problem here, and he just could not figure that out. It's not just the insurance costs that these things will save. It will save it reaches out into all aspects of the business.
I would say one final comment. When we do these kind of initial risk analysis, when we go through with a prospective client or a client that's thinking about implementing these, you can really correlate almost 1-to-1 the accidents that you would see on your claims record to the technology in a telematics program being a solution for just about all of them. And that's when it gets really kind of exciting to see, hey, here's the 5 things that have happened in the last few years. Here's what the technology would have given you, how it would have given you the ability to mitigate these. And that's when we kind of set a path forward.
Right. Yeah.
Well, I'm now going to hire you all to be our spokespeople. Love it. let's go ahead and jump to our last component here, which I know is near and dear to your all's heart, but just the last part of the technology part. Often, we talk about business without blind spots, and I think understanding the gaps, that's part of it, and having the technology as a component. But also an important part is having the right partners in place, and insurance and understanding those components specifically to what we're talking about here today is really key. So I'll let you all take us through this.
I'll just make a quick comment on this. I mean, basically, the way the industry has gone over the years is insurance buyers think that in order to get the best price, they need to get the most quotes, and they need to have, several people quoting. And what we suggest to you, whether it's us or someone else, is to go through more of a broker selection process where you can identify what solutions and support your insurance provider is giving to you, and then kind of assess that way, because by and large, most brokers have the same carriers. So it really becomes, what are they bringing to the table? And Alex, if you want to share kind of, your role and why that's a little bit different than what they get from a carrier, that would be great.
Right. So I used to be a safety director for a construction company, for the construction division of a company, where I would have people coming out and visiting me. There's a big difference between a safety representative that comes to help you and a safety representative that's coming to help keep an eye on you. So what I do is, if I'm working with a client, I work for the client, and everything we talk about is between the client and I. And the producer, like Nick, will take what we've worked on and make a case to the carrier with all the best information. Now, the safety person that works for a carrier, they're coming out to take a look at what you're doing, and the reason they're doing that is twofold. One, they want to help, absolutely, because they're a safety person and they have a moral obligation to help employers. But their let's say dotted line, or their other unspoken objective, is to see how well you're doing what you're doing and report back to the underwriter and let them know if this is a good risk or if this is a bad risk. If you are someone who doesn't have a lot of written programs, you're not paying attention to your hiring processes, you're not doing investigations, the likelihood of a catastrophic loss goes up, and they need to, with that combined loss ratio of 108, they need to be very careful about who they insure and who they don't. So if they are going to insure you, that premium is going to have to go up to take care of their perceived catastrophic loss in the future. Whereas my job, what I do, is I help you prevent losses, period. And I work for my client. And that's the biggest difference, is who our relationship is dedicated to.
Absolutely. Jill, I know we're running up here on 30 minutes.
So now, I mean, to that point, it's sort of about the partnership. I know there's a lot that we sort of consolidated into a quick 30 minutes. We do have some questions. So for those that can stay on with us, we'll get to those. And again, we could go and plan to go much more in depth on these different topics. But again, with everything going on out there, and we're coming out of this pandemic and really starting to get busy again, or I know of our thousands of customers, a lot of them never stop being busy. In fact, got more busier during the pandemic. It's sort of a really good time to sort of pause and say, take a look at this, and what can I do to be more proactive? So with that, let's just wrap up with the quick outlook, and we'll get to those questions.
Yeah, I think just to put it plainly, you're going to continue to see kind of more of the same for now. So the projection and rate increase on average is 14% this year. Depending on your fleet size, that may not be a small number. We're going to continue to see underwriters be more restrictive, really be very picky and choosy, try and pick out the best in class risks. If you're not best in class now, this is the time to kind of work on the things that you can control. Driver eligibility will continue to tighten, so you're going to see less accommodations, you know, if the driver is kind of right on the borderline, which can be problematic, you know, the time that's already hard to get drivers, and we're still going to see less carrier availability.
And long-term, a little bit much of the same, right?
Yeah, kind of more of the same. I
Yeah.
mean, the biggest thing on this, I think, is the best-in-class risk control is going to be the expectation. So it's not going to be, you know, you're going to get better favor for having this stuff. It's just going to be expected that you have these programs in place and this kind of control over your driver programs.
Yeah.
We do think too that telematics will start to be a requirement in the next few years. It already is in some of the insurance programs, captive programs for one.
And absolutely, we're starting to see that rise too. And, you know, with a lot of our customers have been around for a while, they're even mentioning that to us, right? So they might have had 15 of their vehicles on GPS with the intention to add more. And now they're like, oh, wait, we need to add everything else. And they're, you know, it's one of those things like, oh, we always wanted to do that. We just didn't take the time.
Right.
So with that, just sort of a quick, you know, review of ClearPath. Thank you for joining, and we'll go to the questions for those that could stay on. But again, just as I mentioned, we're one of the leading GPS fleet management solution providers out there. We're super focused on our customer success and making it more affordable and, more importantly, flexible terms based on what's important to your business. But ease of use and really be able to get up and running quickly and getting the results we talked about is key. Gentlemen, do you want to just take just a quick moment? Let's dive in those questions about Leavitt.
Yeah, Leavitt Group is one of the top 10 privately held insurance agencies in the country with over 170 offices nationwide. And I think really the main point there is the scale of our agency. So we have some national programs for auto insurance that smaller local and regional brokerage wouldn't have. So just a little bit wider access and specialize in safety programs, fleet management, and claims management. And our role with ClearPath is to help evaluate the system ROI. That's a question we get a lot. I'm going to spend this money. What am I going to get for it? And then beyond that, when you've chosen the system, assist with the rollout to make sure that you have the right training policies, procedures, compliance, make sure you're really getting the most use out of the system.
And we really appreciate that, you know, hand in hand with our customer success team and support, having that extra partner on board makes a big difference. So with that, I'm going to go ahead and throw out some of the questions that we did come in. And for those, again, that took your time to be with us, I hope you found this informative. Quite a few insights on my end that I was happy and or not happy to find out, but at least to have some insights. But again, as far as next steps, we do have a live demo this Friday. So we'll go ahead and send a link to that for people who might want to log in for a quick half-hour session to take a peek at it. And I know that the Leavitt Group will include their information as well in our follow-up with you all, so you can easily get in touch. So let me quickly dive into those questions. We threw a lot at you today, and one person did ask, based on our, you know, I'll say not my, Alex or Nick's viewpoint, what's the most important thing, right? So you threw out a lot at us. If you were to sort of start, you know, not baby steps, but, you know, start diving in, what would be the most important thing to tackle first?
Well,
Alex.
okay.
Who wants that one? There we go.
Well, it's an interesting question because it's not just the most important thing. From my perspective, from a safety and loss control perspective, if you're starting from scratch, the most important thing is to become compliant. Make sure you've got all the required safety programs in place. Make sure you have all the DOT programs in place that you need. Make sure that you have, you know, you've trained your employees to stop at the scales when they need to. All those required compliant things that you have to have, and get those things in place first, so you're not having to deal with regulatory exposures on top of the injuries and accidents. Now, Nick may have a different perspective on this as what is most important from their end, but from a safety and loss control perspective, that would be the place to start.
Well, can I just add on to that real quick? If you didn't have to worry about those compliance components, right? If you're more of a regional service or field service that didn't have that, where would be the next step? And maybe Nick, you could grab that.
Yeah, I would say, Jill, you mentioned, you don't know what you don't know. So I think the most important thing, and we also talked about what's controllable and what's not controllable. And none of us can sit here and worry about health, medical inflation and jury awards. Really focusing on the internal factors and starting with a risk assessment is a great place to start. No matter if you're looking for a new provider or you love your provider, it's a great idea to get a second opinion, a second set of eyes on what you're doing, and kind of use that as a jump off point.
No, that makes sense. Another question that came in, and I love this, that someone said, hey, my rates have actually gone down. What would you attribute to that? So was that luck, or what would you gentlemen say?
Yeah, I love that. I mean, we talk a lot about are you lucky or are you good? And it's kind of a simple way to say it. But if you haven't had claims, and truthfully, the ClearPath technology has showed us in many cases where an employer thinks, oh, John Smith, he's my best driver. They employ this technology and they find out he's a ticking time bomb. The guy's speeding all over the place. So if you haven't had claims, that's excellent and certainly does help your rates. But I think it still behooves you to kind of look into a little more closely what's going on in the organization with your drivers, and you might learn something new.
Yeah, great. I appreciate that. And it's interesting too. You often hear that, oh, my drivers. We could wholeheartedly say that a lot of our customers, they love and have amazing staff, but it's always that one person that's unexpected. Would you guys agree?
Oh yeah, absolutely. There's a from the safety and loss prevention world, there's a law of large numbers. The smaller your group is, the luckier you seem to be, just because you don't have the number of exposures that a larger company might have. And there's a safety pyramid where you think about, for every 1,000 close calls, you're going to have 100 minor accidents, and for every 100 minor accidents, you're going to have 10 majors. So it's this number of incidents you have is going to be directly related to how many minor and major incidents you have. So if you have 10 people, you might go years with nothing happening, operating with the very worst type of behaviors. So just to support what Nick talked about with the ticking time bomb.
No, absolutely. And again, we could go into more details around that in subsequent sessions, which I'm excited to do. I think, based on the response and the folks have stayed on with us past the allocated time frame, thank you for that. I think that there's definitely some more things to unfold and uncover here. So with that, I'm going to go ahead and take some of these questions offline. Some of them came in regards to ClearPath and use of dash cams as well, and our capabilities around that. And then Leavitt as well, as far as contact information, which we will share. So with that, I will go ahead and take those offline. Thank you so much, both to Nick and Alex, for sharing your insights. We'll get you back online very soon to go a little bit more in the trenches on some of these topics. And thank you to those that took your time to spend with us today on learning a little bit more about the scoop on rising insurance costs. Thank you so much and have a good day.